On Saturday, November 8, 2025, the financial world turned its eyes toward Russia, a country whose markets have long been a barometer for both regional and global economic sentiment. Investors, analysts, and policymakers alike were watching closely, anticipating the usual flurry of activity that often characterizes Russian trading sessions. Russia, with its vast natural resources and strategic geopolitical position, is often at the center of economic and political shifts that ripple far beyond its borders. Its financial markets are a reflection of both internal dynamics and the pressures exerted by the global stage. Yet on this particular day, what observers found on the Moscow Stock Exchange was not the expected volatility, but an unusual stillness. The MOEX Russia index closed completely flat, showing no net change from the previous session. In a market renowned for its dramatic swings and unpredictable turns, this statistical anomaly stood out. It hinted at a deeper, more complex story about the forces shaping the Russian economy at that moment. Forces that were, for once, in perfect balance. It wasn't a day of dramatic gains or steep losses, but rather a rare moment of equilibrium, where opposing economic pressures, both domestic and international, seemed to perfectly cancel each other out. This balance is seldom seen in such a dynamic market. While the index itself showed zero change, beneath the surface, many individual stocks were on the move. Some surged ahead, while others slipped back, their gains and losses intricately balancing out to create this rare flat line in the overall index. Sectors like telecommunications and technology experienced notable gains, reflecting optimism in innovation and connectivity, while energy giants, long the backbone of Russia's economy, faced declines, perhaps due to shifting global demand or regulatory pressures. This created a unique case study in market dynamics, where the interplay of different industries and external factors resulted in a statistical standoff rather than a clear winner or loser. In this video, we'll break down the events of November 8th in detail, exploring which companies led the charge, which ones lagged behind, and what this flat performance reveals about the underlying health and direction of the Russian market. We'll also consider how these movements fit into the broader context of global economic trends and investor sentiment. We'll take a closer look at commodity prices, the performance of the Russian ruble, and how these factors interact with the stock market to paint a fuller picture of Russia's economic landscape on that day. By the end, you'll understand why a day that appeared uneventful on the surface was, in reality, a fascinating snapshot of balance, tension, and the unseen forces that drive financial markets. The MOEX Russia Index stands as the main barometer of the Russian stock market's health, capturing the pulse of the nation's financial activity every trading day. It's more than just a number. It's a reflection of the hopes, fears, and strategies of thousands of investors. On this particular day, all eyes were on the index as it hovered, seemingly unmoved, at the close. For many, this flat finish might look uneventful, but beneath the surface, the market was anything but quiet. When the MOEX closed with a 0% change, it signaled a rare moment of perfect equilibrium, a statistical tie that's uncommon in such a dynamic environment. This wasn't due to inactivity. Trading was lively and intense. In fact, 150 stocks managed to rise, 62 fell, and 26 remained unchanged, each reacting to its own set of catalysts and pressures. The upward momentum of some stocks was perfectly matched by the downward pressure on others, creating a delicate balance that kept the index steady. There was no single news event or headline driving the market that day. Instead, investors were responding to a mosaic of company-specific developments and sector trends, each piece influencing the overall picture. For example, tech stocks surged on a wave of optimism, fueled by strong earnings reports and positive forecasts for the sector's future. Meanwhile, energy stocks dipped as oil prices softened, reflecting global supply concerns and shifting demand. The net effect was a flat MOEX index, a calm surface that masked a dynamic, even turbulent market beneath. Every trade, every decision, contributed to this rare balance. For investors, a flat day can mean indecision, a pause before the next big move, or even a sign of underlying stability as opposing forces cancel each other out. It's a reminder that an index is just a summary. The real story is in the details, in the individual battles fought by each stock and sector. On November 8th, the market was a battlefield of competing interests, with bulls and bears each making their case, but ultimately ending in a stalemate. Neither bulls nor bears claimed victory that day. Instead, the market found a rare moment of balance, a truce in the ongoing tug-of-war. The result, a deceptively simple outcome from a complex day, reminds us that sometimes the most interesting stories are hidden in plain sight, waiting to be discovered beneath the numbers. Even on a flat day, some stocks stood out as winners. Rostelecom PJSC, Russia's largest digital services provider, led the pack, its stock climbing 0.73%. Aeroflot PJSC, the national airline, followed with a 0.64% gain, reflecting optimism in travel and tourism. IPJSC Yandex, Russia's tech giant, rose 0.52%, signaling strong belief in the sector's growth. These gains in telecommunications, air travel, and technology highlight a shift towards service-oriented industries. Their performance helped offset losses elsewhere, keeping the MOEX Index balanced. On this day, they were the pillars holding up their side of the scale. On the other side, energy companies pulled the market down. Tatneft's stock fell 0.30%, reflecting caution in the oil sector. Lukoil PJSC dropped 0.29%, underscoring pressures facing oil and gas. Surgutneftegas, PJSC slipped 0.15%, a small change with big implications in high-volume trading. The dip in these energy giants counteracted gains in tech and telecom. Investors were trimming positions in oil and gas, at least temporarily. This balancing act kept the MOEX index unchanged. The modest losses from energy giants created a perfect stalemate. Beyond simply tracking stock price movements, financial professionals and seasoned investors keep a close eye on the Russian Volatility Index, or RVI, often called the market's fear index. The RVI is a key indicator that helps market participants gauge the level of uncertainty or nervousness in the Russian financial markets. The RVI measures the market's expectations for volatility over the next 30 days, providing a window into how turbulent or calm investors believe the near future will be. It's calculated using options prices, which reflect traders' collective outlook on risk. On November 8th, the RVI closed unchanged at 36.15. This mirrored the flat performance of the MOEX Index, Russia's main stock market benchmark, suggesting that both actual and expected volatility remained steady. In practical terms, this means investors' expectations for future risk did not shift. The market interpreted the day's events as balanced, with no major surprises or shocks to disrupt the prevailing sense of stability. It's important to note that a reading of 36.15 is relatively high compared to global volatility indices. This elevated level reflects Russia's heightened sensitivity to geopolitical tensions, commodity price swings, and broader economic uncertainty, all of which can quickly impact investor sentiment. While the MOEX index shows what happened in the market today, the RVI offers a forward-looking perspective, helping traders and analysts anticipate potential risks and prepare for possible market swings. For active traders, the RVI is an essential risk management tool, guiding decisions on hedging and portfolio adjustments. For market observers and analysts, it serves as a barometer of market anxiety and overall investor mood. The steady RVI on this particular day reinforced the theme of equilibrium, not just for the present, but also for expectations about the near-term future. It signaled that, despite underlying risks, the market was not anticipating sudden shocks. The trading environment was calm, yet professionals remained alert, ready to respond if conditions changed. Ultimately, the stability in the RVI underscored the day's unique balance, highlighting the importance of monitoring volatility as a key part of understanding market dynamics in Russia. The RVI stability at 36.15 raises a question. Is this true calm, or the calm before a storm? One view is that the market has priced in all known risks, showing resilience. Another is that traders are waiting for the next big catalyst, be it a central bank move or geopolitical event. The high RVI suggests investors are prepared for turbulence, even if today was steady. It's like a sailor seeing calm seas, but knowing stormy weather is forecast. The unchanged RVI is a reminder. Today's stability doesn't guarantee tomorrow's. The market was calm, but watchful. Russia's stock market is closely tied to global commodity prices, especially oil and gold. On November 8th, gold futures rose 0.47%, and oil prices climbed modestly. Higher gold prices benefit Russia's reserves, while rising oil supports its core industry. The simultaneous rise in both suggests a complex environment, optimism for growth, but caution about risks. For Russia, this is almost ideal. Strong reserves and strong export revenues. These commodity gains helped contain losses in energy stocks. Investors likely held onto positions, believing fundamentals remained strong. The supportive commodity environment was a stabilizing force. It propped up the Russian outlook as the stock index treaded water. The Russian ruble showed resilience, strengthening against both the US dollar and the euro. The USD to rub rate fell 0.37%, and the EUR to rub rate dropped 0.21%. This wasn't just about weaker foreign currencies. It reflected the ruble's own appeal, likely boosted by rising oil prices. A stronger ruble curbs inflation and increases purchasing power for Russians. For the government, currency stability is a key goal. The ruble's firm performance, despite mixed signals in stocks, showed confidence in Russia's macroeconomic management. Strong commodity prices outweighed concerns, providing a solid foundation. The ruble's strength was a positive sign for the nation's economy. November 8, 2025, was a day of rare equilibrium for Russian markets. The MOEX Index closed flat, masking a tug-of-war between rising tech and telecom stocks and slipping energy giants. The RVI stayed steady, signaling no new anxiety but ongoing awareness of risk. Commodity prices rose, supporting the economy and limiting downside for energy stocks. The ruble strengthened, reflecting confidence in Russia's financial position. Together, these factors painted a picture of a market navigating global crosscurrents with surprising stability. The day showed that a zero headline can hide a wealth of activity and balance. The question remains, will this calm hold, or is it just a pause before the next big move?